Hey guys, welcome back to my channel where we have all things faith, life and travel. So I did a quick poll recently on my Instagram and asked you guys what content would you like to see, and the majority of you guys came back and said you'd like to see some content around savings and investments. So in this video, we're going to be speaking about UK ISAs, as they are a really popular option for saving and investing in the stock market. So I myself have had a cash ISA, I had the help to buy ISA when they were available, and I currently have a stocks and shares ISA. So getting into it, the first thing that we're going to do is look at what is an ISA. So an ISA is an individual savings account. It is essentially a tax wrapper, meaning that any interest earned or any capital gains earned in this account is exempt from tax. And the maximum that you can save in any tax year is £20,000. There are many different types of ISAs and we are going to look at that now. So one of the first options for an ISA is a cash ISA. You can save up to £20,000 per tax year and any interest earned is tax free. Now, one of the reasons why people like a cash ISA is obviously because of the exemption from tax. So in a normal savings account, any interest earned above £1,000 is taxed. Another feature of the cash ISA is that your deposit will usually be protected under the Financial Services Compensation Scheme. Now, there are some caveats to this which we'll speak about a little bit later on. So the first part is, just because it's tax-free, it doesn't actually mean that it is offering you the best savings rate. There may be a savings account option available for you where there is a higher rate of interest than in a cash ISA. So there are also different types of cash ISAs that you can get. So you can have easy access ones where you can get your money out when you need it, or there are fixed rate accounts. They typically offer a higher rate of interest. However, for doing so, they do require your money to be locked up for a period of time, which is typically between 12 months to 5 years. So if you do want easy access to your cash, then an easy access cash account may be better for you. I also mentioned about the Financial Services Compensation Scheme. You will only be protected if your ISA provider is a regulated firm. What I'm going to do is include a link below to help you get some information on whether or not an ISA provider is regulated. Okay, so now we're going to get onto stocks and shares ISA. So with a stocks and shares ISA, again, you can invest up to £20,000. The difference is that not only can you hold cash, but you can also hold a range of financial instruments as well. So such as shares, bonds, and investment funds. So one of the reasons why people like to have a stocks and shares ISA over a normal investment account is because, as mentioned earlier, you are exempt from paying taxes. And this relates to dividend taxes and also income and capital gains taxes, whereas in a normal savings account you'll be subject to paying those taxes. So with a stocks and shares ISA, there are different platforms that you can use. You can have a do-it-yourself platform. So this is basically where you decide the different types of instruments that you want to hold in your portfolio. Now, there is another option which is the do-it-for-me option, which is basically where the ISA provider will determine the different types of investments and instruments that will be suitable for your portfolio based off of your risk appetite. So based off of how comfortable you are with investing, there are different options that are available to you. Again, I will link further information to this in the description below. There are, of course, added risks with investing in the stock market, and we're going to talk a little bit about this later on. So with a stocks and shares ISA, if you lose your capital, so say for example you buy £5,000 worth of shares, and due to turmoil in the stock market your portfolio is now only worth £3,000, you cannot get any compensation for that £2,000 that has been eroded. So you will need to ask yourself, are you comfortable with investing in the stock market knowing that you could potentially lose your capital? Now, if you are not comfortable with that, then a cash ISA may be the better option for you, as you are not obviously investing in any instrument that could go up and down. Okay, so another type of ISA which was introduced a few years ago is a lifetime ISA. So the lifetime ISA are for those of you who are intending to buy your first property, or if you would like to save for your retirement. So with a lifetime ISA, it's similar to a stocks and shares ISA in that you can hold cash and stocks and shares, or you can hold a combination of both. So you can save up to £4,000 each tax year, and the government will give you a 25% bonus. So some things to consider about the lifetime ISA. The first thing to note is that the government will pay a contribution up to each year until you turn 50. Once you turn 50, that contribution ends. If you are intending to use the lifetime ISA to purchase a property, then the maximum amount that your property can cost is £450,000. If on the other hand you are intending to use it towards your retirement, then you will not be able to access those funds until you are 60. Now, if you withdraw the money for anything that is not going towards your first home or that is going towards your retirement, then there will be a penalty of 25% for any amount that is withdrawn. Now, one of the last ISAs that we are going to speak about is a junior ISA, and this is available for children between 0 and 18. With a junior ISA, a maximum amount of £9,000 can be invested per calendar year, and this can, again, similar to the stocks and shares ISA and the lifetime ISA, you can hold either cash or stocks and shares or a combination of both. Now, some things to consider is that if you are opening this for your child, they will not be able to access any funds in this account until they are 18. However, from the age of 16, they are able to start managing the account on their own. Now, one of the things that I really like about having a junior ISA is that when it comes to their birthdays or Christmases, rather than people basically giving them toys and clothes or things that they already have, instead you could say, hey, why not make a contribution to their junior ISA? Here are the account details. Now we've spoken about some of the ISA options that are available. The next thing we're going to do is talk about some of the things to consider before investing in the stock market. So the first thing that I'll say to consider is to think about the length of time that you want to invest. Now, what they usually say is if you want to invest for a short period of time, so say up to 3 years, then they would usually advise you to have cash. However, if you do want to invest further beyond that and you have a longer time horizon, then the stock market may be a better option. As you guys may know, the markets go up and down. Sometimes you win, sometimes you lose. So in order to ride out those ups and downs, they usually say it is better to think about investing for the longer term. Now, how I think about this myself is, so as you guys may have seen, I did a video on shared ownership and I spoke about selling my property. Now, I have a deposit put to one side for when I'm ready to buy my new property. Now, I cannot in any way afford to lose that money. So that money, I do not invest in the stock market. Instead, I put that into a cash account. I also have a cash account for things like emergency savings, for example. So if anything goes wrong with my car, then I have an emergency account for that. And again, I'm not trying to put that money into the stock market. So with my stocks and shares ISA, I only put money in there that is for my future, that I don't need now, and also money that I can afford to lose each month. The other thing that I would say is don't just follow the herd. Just because some people are doing it, it doesn't mean that you have to do it. You need to do your own research for yourself and understand if this is an investment that you yourself want to take on. The next thing that you need to consider is the cost of investing. With the stocks and shares ISA, we spoke about the fact that it's exempt from paying any taxes. However, there are still costs associated with investing. Now, you'll most likely be charged commissions when you buy shares, and there may also be fees associated with buying funds, so whether that's going into the fund or exiting the fund. You may also find that there are costs for fund management fees. So if you have a fund manager that is managing your stocks and shares ISA, then on an annual basis they will charge you a fee for managing your portfolio. Another thing to note is that past performance is not indicative of future performance. So just because something has performed really well in the past, it doesn't mean that it is going to perform the same way in the future. So that's also something to be aware of. Now, the last thing that I want to touch on, some research that was done by the Financial Conduct Authority. So the Financial Conduct Authority is the UK watchdog and the UK securities regulator. And they recently did some research into reasons behind why young people are investing in higher risk investments. Now, you guys are probably aware at the moment that there are so many people talking about Bitcoin, cryptocurrencies, shares, Forex, etc. So what the Financial Conduct Authority did was they did some research to have a look at why are young people investing? What is their motives? And what they found was that the majority of people are investing emotionally, that they are investing based off of feelings, but also when they invest, they are not always aware that their full capital is at risk. So what they have done is they've listed out 5 important questions to ask yourself before investing. And we're going to speak about that now. Okay, so the first thing that they say to ask yourself is, are you comfortable with the level of risk that you are taking? So if you are, for example, considering an investment that offers high returns, are you also comfortable with taking the risk that comes with those high returns? The next thing they say to ask yourself is, do you fully understand the investment that is being offered to you? Now, for example, cryptocurrencies, like I said, is a really big thing at the moment, Bitcoin, etc. Before you take on any of these investments, ask yourself, do you understand the investment product? Do you understand what is being offered? Do you understand the length of the investment, the term of the investment? Do you understand the risks involved? And another thing to think about here is how liquid is the investment? Now, liquidity is basically how quickly can you turn your instrument back into cash. Now, if I just give you guys a quick example, so think about a fund. Now, a fund will invest in lots of different companies, and the reason why people like funds is because they are diversified. Now, some of these funds invest in property. Now, if you guys watch my shared ownership video, you will see that selling a property is not easy and it can take a long time. So think about it. If you're investing in a fund that has property, then if you want to get your cash out quickly, it may not be that easy, because the fund will have to first sell the underlying assets within those funds, and they may not be able to do that in a quick amount of time. So that's one thing to think about. How liquid is the investment that you are investing in? The third thing that they say to think about is, are you protected if things go wrong? Now, we spoke about this with the Financial Services Compensation Scheme. So you need to think, if I invest in this, if things go wrong, how protected am I going to be? And following on from this, the fourth question they say is, are your investments regulated? Now, there are a range of instruments that are not regulated, and the Financial Conduct Authority lists these out. Again, I will include a link below so you can get some more information on this. And the last thing they say to ask yourself is, should I get financial advice? So you may want to consider getting financial advice before you invest. So what the FCA have also done is they've included some information on where you can get financial advice, and they've also included some tips on the questions to ask when seeking financial advice. And again, I will include all the links to this in the description below. Anyway guys, I really hope you found this video helpful. I hope that it has given you a good overview of some of the key features of UK ISAs, and as well as some important things and some questions to consider before investing in the stock market. If you do have any questions, as always, please feel free to drop them in the comments below, or you can find me on Instagram and send me a DM. And as always, if you like this video, please give me a thumbs up. If you like my content, subscribe to my channel, and I will see you guys in my next video.